One. Hey, everyone. We are live. Welcome to another exciting broadcast of the Bearded Men of Real Estate show. I'm Ray. Say hi, Dan.
Hi, Dan.
And this is Dan. And both of us are real estate agents. Dan is out of L.A., and I am out of Arkansas. So together, I know if you're listening to the audio-only version on Clubhouse, hint, hint, you can't see Dan's beautiful face. Lindsay just joined the conversation, too, so we'll have to get her on there. We are broadcasting in 3 different places right now, and it is a little over my skill set, but we're having some fun with it. You'll notice that in the split screen, the third screen over, is our Be More logo with a little waving hand. And that is because right now we're on Clubhouse, carrying the show there as well as broadcasting on YouTube and Facebook. So this is a little bit nutty. Matt is our moderator in Clubhouse, and will be updating me whether or not they can hear the audio and all that kind of stuff.
And by the way, just another side note, we're streaming and we're live on YouTube and on Facebook, and I'm streaming live from my new GoPro on my personal page.
Yes. And if you comment, we could display your comment, like Pete Thorpe, so Pete Thorpe is watching on Facebook and he is also on Clubhouse. He said the lag is crazy. Dan is live on his GoPro. Are you talking about Dan's lag on his GoPro, Pete, or are you talking about the lag from Clubhouse to the stream? Because I'm super interested in that. And if you want to just answer with audio, I'll just let you join the conversation through our Clubhouse.
Yeah, and I just ended my stream. So
can you hear behind me now? Facebook is behind Clubhouse, and Dan's on my other screen, just on his GoPro.
Inception. This is incredible. Okay, and sometimes you'll see there's a little bit of echo on occasion. I'm going to try to get that down. Melissa Morris said, OMG, which way should I watch? I know there's so many options that were really thrown out. This is groundbreaking technology. I wish they made it a lot easier to somehow get audio out and also get your speaker out, because that was kind of the issue. Like I could get the audio, but I also, if I got only the audio, then it would try to use the speaker, and I have the speaker hooked up for the podcast. So it was super confusing, but I think we have it all figured out. But if you are listening to us live on Clubhouse or watching, we have an exciting show for you, I think. We're going to talk about existing home sales in 2020. They hit their highest point since 2006, but listings are at a record low. So what could we have hit? So I would love to hear your predictions on the number we could have hit. When I tell you what we hit this last year, what do you think we could have hit? Dan is going to discuss an article about home prices and where they sit as compared to last year. Let's see, Zillow. They say we should expect a record year this year. I would love your opinion on that because I'm not so sure. I don't know. We'll kind of see. Weekly mortgage demand falls. That's one of the reasons I'm thinking maybe not a record year. And then we'll talk about housing starts and are they keeping pace with what we think we might have to have in order to hit those numbers. We do have a little note about CoStar and who they're looking to acquire. Just as kind of an informational note, CoStar, as many of you know, we covered several weeks ago, acquired, it's right on the tip of my tongue, HomeSnap. And they said that they were going to be a competitor for Zillow. So it's kind of a bit of a wait and see. So we'll see how that goes. But for now, I would like to introduce you to 2 people for our live audience who are joining us via Clubhouse. Actually, we could go 3 people. I'll put Lindsay up there too, because I specifically asked her to join. So Matt, could you mod up Lindsay and have her join the conversation? So there's 3 people right now joining us in Club. I mean, it's a huge room. I mean, enormous. If you've been on Clubhouse for any time at all, you know how big a room of like 7 people are. So Del, why don't you introduce yourself to the YouTube and Facebook and Clubhouse watching audience?
Hello, world. My name is Del Schaffer. I'm a residential realtor in Charleston, South Carolina, the Holy City. Grew up here. I've been in real estate since 2013, since I left Chick-fil-A for Broader Horizons. And I used to live overseas as well, in France and England. But Charleston has always been my first home.
Nice, man. Well, thanks for joining the show. And so at Chick-fil-A, they always talk about the Chick-fil-A employees like being some of the greatest employees on earth because they're so efficient and well mannered. How has that, in just a real brief, like 2 minutes, give me the 2 minute on how working at Chick-fil-A has helped you in the real estate industry?
I guess for one thing, I say my pleasure a lot more than I used to.
Yeah.
And I feel like
Hey.
it kind of gives me away to everybody when they say thank you and I say my pleasure. They're like, you were at Chick-fil-A, didn't you?
Yeah. Hey,
Yep.
thanks for selling our home. My pleasure.
That's exactly it.
And then, yeah, it's pretty cool though. They have really good processes and really good human resources. They actually here in Mount Pleasant, outside of Charleston, they hired some Chick-fil-A managers to help run the vaccine drive-through. And it's actually been in LA Times and all these. He was on the mayor of Mount Pleasant was on Fox and Friends, I think, today talking.
Nice. So if you're looking for efficiency, you hire Chick-fil-A to distribute vaccines. That's beautiful. I love it.
Yeah. Have you ever been to one of their drive-throughs when they're on fire?
Go through, get a chicken sandwich, and then get a shot while you're at it, maybe.
Get a chicken sandwich and a shot while you're at it. I love it. Okay, so next up is Pete Thorpe. He's also active in the chat, as you can see. He says, and there's really good chicken. Let's see. All of them, Clubhouse is live. Facebook appears to be 10 to 15 seconds behind. All right, this is good info. So Clubhouse is little or no delay, which could be expected for audio. And I can tell you, once I play the audio through the system, I get a little bit of echo. So I'm having to kind of mute myself back and forth. So if you experience a little bit of delay as you're listening to it, that's probably what some of that is. But Pete, why don't you tell us who you are, where you're listening from in?
So my name is Pete Thorpe. I run the State Line group here in Maryland and Pennsylvania. And it is super interesting watching the lag, because I can see you on my screen. I can see Dan on my other screen. And but we're here in Clubhouse Live. The audio is fantastic in Clubhouse, though. It is super crisp.
That's good.
Are you able to hear Dan pretty well as he's talking? Because that audio is actually coming from environmental audio from the computer itself. What was that? What was that, Pete?
That's good. That's good. Are you able to hear?
Oh no! See, wait, hang on. Sorry.
It's actually coming from environmental audio.
See, that's part of that's what we're gonna have to deal with a little bit on occasion. If I hit the wrong button, that's what happens. It's like Clubhouse Inception happens.
It's just crazy.
Sorry.
Yeah.
Definitely a long lag in there.
That's part of that's what we're gonna.
Yeah. So you can actually. So I'm hearing. Now I'm hearing Pete's audio come back through from what he's watching too. So Pete, you're gonna have to mute one of those, like a good radio caller, sir. Okay. All right. And then last up is Lindsay, who is last but definitely not least. We will be doing a special get together. The Homegirls and the Bearded Men will have the long-awaited reunion special sometime through mid-February.
Reunion special.
That's right. The reunion special through mid-February. So be prepared to hit that. But Lindsay, tell us who you are and what you do, madam.
I'm in Denver, and this is so cool. This is blowing my mind right now. So Ray promised to call me, everybody, so you can hold him accountable to that, to school me on how he's doing this, because I can't figure it out. But I'm in Denver, and I'm a longtime Be More fan, and I run the Creed group, and I'm a listing agent.
Nice. She just said, I don't know what else to say on there too. So you're also one of the top realtor. I mean, you're very, actually you are the top realtor, right? Aren't you the top realtor in your area? And what is your area again?
I'm in Denver, and I'm the #1 listing agent in the Denver metro area and the #3 agent in the state.
Yeah, see, that's what I thought. That's pretty incredible. Big timing. We're big timing.
Yeah, I do 2 listings a year,
got
so
the
to
jump
have
on
her on the show is pretty awesome.
Yeah. Oh wait, now now the Clubhouse group is like talking amongst themselves, which is cool, but we can't hear you on the live stream. And you just go ahead. Y'all can have their own conversation.
And I think the jury's still out as to whether or not they can actually hear me. I don't think they can.
No, they can. They can hear you because it's coming from environmental audio and it's playing back through. And it's very confusing. I mean, normally Clubhouse is kind of conversational. This format's going to be a little bit different because it is more of a podcast. So we'll kind of be like going to the club. Going to the club. Yeah. Okay. No, we'll kind of be going into the Clubhouse to pull comments out of it. And when I see you guys like unmute your mic, I'll assume, oh, like they want to say something. So I'll try to look down and see if you guys are unmuted so I can run to you. Just like, right as I was going to Pete, he muted his mic. But Lindsay is now unmuted. So I'm going to go to her for a comment. Lindsay, comment.
Yes, Del. I love Aurora. I don't handle Colorado Springs. I have a great referral agent named Angela down there who's one of my friends on my podcast, but all the rest of the suburbs of the Denver metro area for sure.
See, there you go. This is incredible. Making connections.
Dude, this is groundbreaking. This is literally breaking ground. It's like we're live broadcasting on all the regular ones, YouTube and Facebook, but we have live callers calling in while they can all chat to each other.
They can. Insane. I mean, I will be rudely interrupting them because I'm essentially just ignoring their conversation as I talk over them. Right. But yeah, they could have their own conversation, and then we could just like peer in every now and then. I could hit the unmute button and then hear whatever they're talking about.
That's awesome.
But let's see. Oh wait, hang on.
Last night, you can flash the microphone like on off.
It's so good.
Yeah. So if you, that's right. So if you flash your microphone on and off in Clubhouse, it means like you're applauding. But Lindsay made the mistake just now of flashing her microphone while she was telling us, which so.
Stupid. That was blonde of me. I was saying they could flash their mics to signal that they want to speak, but you would only hear that if I wasn't muted.
Right. And Matthew Clanton is generous. He comments, he says, I've got one Clubhouse invite if anyone wants in. Now I saw him selling that for like $2,000 yesterday. So maybe you could put a bid there. Eugene Yorvoski. Have you joined our show before, Eugene? He says, hi guys, Zillow can't rival with bearded realtors. Yeah, I thought I recognized him. I thought I recognized that last name. All right. Well, Dan, are you ready to finally get into this show?
Yes, but before we do, I would like to mention to everyone that hates all of this stuff, although we are excited, this is amazing for us.
Yeah.
There's going to be timestamps on the YouTube video, so don't worry about it. You're good. And we also do what's called Be More Chops, which will just be the chops, little 5 to 10 minute chops of our show. Get it? Chops, like chops.
Like a beard.
And you can just watch the highlights if you like. So if you hate us, but you love the info, there you go.
Yeah, and you can go down to those timestamps and click right one of those timestamps, and it'll zoom you to that part of the live show if you're catching this later on the replay. There is no replay on Clubhouse, but if you're looking for the audio-only version, we do have it in a podcast form. So you can just say, smart speaker, play the Bearded Men of Real Estate show podcast, and it will play that for you. Or you could just subscribe, which we would love, and it would be delivered right to your favorite podcatcher.
To all those people that bought the discount smart device, their smart device just got turned on.
Yeah, that's right.
Even though you're trying not to.
I was really trying not to. Dusty Martin says, I'm just here for the witty banter. So I've had people comment, like, get rid of the banter. Let's just get into the news. I'm like, okay, so there's chops for that. There's like actual segmented portions of the show. And if you are joining us in Clubhouse and you want to talk or you want to say something like Les and Jerry, I see you guys checking in. I appreciate that. There's a plus button at the bottom too. We'd love it if you'd ping other real estate agents or real estate professionals in, lenders, title companies, even a couple of consumers. Okay, too. Generally, we love getting feedback in the conversation from other real estate agents that are both in the room and joining us live. So, all right. Well, without further ado, are you ready to get into this show?
I don't know. I think so.
And just like that, we're in the headlines. Christian Harris comments says, I'm just here for me beard fix. I'm just here for me beard fix. Oh, it's like, oh, I got to read it like a pirate. Hang on. I'm just here for me beard fix. Yeah, I get it now. Okay. Thanks, Christian. All right. Well, without further ado, let's get into the first headline. And I'm not even going to pretend to try to also. So normally if you watch this live, we'll like show you a portion of the article so that you know where the article came from. It's probably like copywritten or something like that. And that's probably why we do that. But I'm just going to say, like, for this one's on CNBC, because displaying the articles and trying to get comments, like I literally have no hands left. So we are we're at our limit. And Matt, I do see that some folks are raising their hands, so feel free to get to them. The first topic up for grabs. We're going to talk about existing home sales in 2020 hit the highest point since 2006, but listings are at a record low. So this article does come to us from CNBC. The pandemic-driven demand is how the article starts. And my question is, was it really pandemic-driven demand, or was there demand there that then was suppressed, but then came out towards the latter quarter? Anyway, it sent the total 2020 home sales to the highest level since 2006. According to the National Association of Realtors, sales were 22% stronger than December of 2019. Now, note in the article that there isn't that big negative splash that it normally says. Sales were only 0. whatever percent above where they were last week, but they're 22% stronger. No, this one's all positive, which Dan and I have talked about the politics behind that, and we may or may not disagree. So the total year-end sales volume ended at 5.64 million. 5.64 million units. Home sales could possibly reach what? So this is the quiz part of the show. So I want to get some answers here. Dan, I'm going to start with you.
Yep.
What do you think home sales could have reached, says Lawrence Yoon, chief economist for the Realtors, had we had the inventory? It got to 5.64 million. What do you think it could have gotten to?
I mean, I'm going to kind of base it on where I was at all year, or where we were at in my city for the last part of the year, which is, I'm going to run my numbers when I hit my next story. But if we had a regular 4 months of inventory, I mean, you got to think, if every single house, I don't know what the averages are, but every single house is getting 10 offers. Like, we're averaging about 10 offers, maybe more. I'm being conservative there. That's one buyer with 9 left over.
Right.
So, I mean, you do some quick math. If those 9 buyers had somewhere to go, then, I mean, I would add another million to that at least, right? I mean,
another million units. So you think like 6, you think you would have said like 6 point, what was it, 0.4? Was 6?
Yeah, add another million, 6.5 million. I don't know. I can't crush those numbers, but also you'd have to be careful though. If you have too much inventory, then there's not enough buyers. But if it stayed in the kind of 2.5, 3 months supply where there's just enough, I think it could have added another million.
All right, let me jump to Pete. Pete, what do you think the year-end sales could have been had we had enough inventory, according to the chief economist Lawrence Yoon? And hopefully you didn't Google it.
I did not Google it, but I think it would have been a full cup of coffee, unlike what I just spilled all over the place.
Oh no. Oh no. All right, so what's your $1 million estimate? What would it have been?
Full inventory? I don't know. I'm distracted by the coffee. Go to Lindsay.
That's hilarious. Okay, Lindsay, what do you think? How many millions of units could we sold, according to Lawrence Yoon, chief economist, had we had full available inventory for everyone to make a purchase?
All the millions?
Oh my gosh.
I'm really bad at math. Real bad at math.
And don't just say more.
Half as many times as we sold, because I didn't hear the number.
Okay, so if we add half back to that number, that would have been what, 2.34?
So she's saying
7.9. 7.9. And the winner is Lindsay. He thinks 8 million would have had. Yeah, he thinks we would have been at 8 million this year. So apparently there's almost 3.5 missing, or 2.5 missing million. So she was almost right on the button there.
So that means, and are these December's numbers?
These are year-end numbers, is what they say.
So that means there's 3 million buyers out there right now.
Yeah.
In his estimation. Wow.
And he says mortgage rates should remain very low throughout 2021, though we may have seen the lowest already. I don't know if they're going to remain low through 2021 with Yellen and what we're seeing so far. I'm not so sure.
Well, remember, what is low?
Yeah, I mean, historically low. You could say
Right.
it's historically low because the historic average is like 7 to 8%. So yeah,
Right.
they would be right if they said it's going to be historically low through 2021. But
Right.
he says, although we may have seen the lowest already, so getting the old 2% may be over.
Yeah, because right now, and I'll cover it in one of my future stories.
Yeah. Melissa Mara said any of those 3 million can't find anything.
Yeah,
I don't know. I don't know. I don't know. We'll see. Anyway, Dan, you wanna go ahead and get to the next article? And guys, if you're catching us on Clubhouse, if you're joining, we'd appreciate if you hit the plus, add some other real estate professionals. This is the Bearded Men of Real Estate show live on Clubhouse, and we can add your comments and your conversations just by putting you up in the speaker. So if you raise your hand, we can add you to the speaker, and I'll unmute you, and you can add your 2 cents.
he'll push 74 different buttons, and then it'll
literally have to do that. Yeah.
So November home prices. So we just did year-end numbers. November home prices rose 9.5%, which is one of the highest gains on record. And I'm trying to think here, like, what would this headline have been if this were, because we're 2 months behind. So if we were in November right now and we were running through September numbers, what would this headline have been? Just curious. I'm just curious. I'm not saying anything. I'm just curious, but
you're saying a little something, which is surprising. You're kind of saying a little something.
No, I'm just curious.
Okay.
Because by the way, and never mind. Okay, the surge in home prices is not slowing down thanks to high buyer demand and a record low supply of homes for sale. So currently in my market, we are at a 20-day supply. We have 20 days worth of homes right now. Like, I did the exact math. We have 20. If we don't get one more listing right now, which I have to put one in the MLS later, so we're at 21 days supply with my new listing coming on the market. That's insane to me. I guess that's why there's 3 million extra buyers laying around. But prices nationally rose 9.5% in November compared with November of 2019. That is the strongest annual growth rate in over 6 years and a significantly stronger gain than in October, when prices were up 8.4%. That is a quote from Craig Lazara, who is the managing director at S&P Dow Jones Indices. Recent data are consistent. That's the proper way to say that, by the way. Recent data are consistent with the view that the Rona has encouraged potential buyers to move from urban apartments to suburban homes. He goes on to say that this may represent a true secular shift in housing demand, or may simply represent an acceleration of moves that would have taken place over the next several years anyway. Future data will be required to address that question. So I want to come back to that little point that he made right there. May simply represent an acceleration of moves that may have happened in the future. So, but as we've discussed on the show, builders have been ramping up production recently, which could throw a bit of cold water on these very hot prices. Now, this is a quote from Danielle Hale, who is the chief economist over at Realtor.com. Our 2021 outlook expects an eventual moderation to price gains, which we all should, right? As home construction ramps up and the widespread availability of the Rona vaccines bring more flexible sellers back to the housing market. But it will be some time before these changes bring relief. So, Ray, let's go back to that. Is it just all these buyers were going to buy in the next 2 or 3 years, but they were like, well, I can do it now, so let's do it now? Or is it truly, let's get away from all this urban how do you say condensation, where we're all condensed together?
Urban condensation.
Urban condensation.
Probably not the way to say that.
There's a lot of people condensed into one area. How would you say that?
Yeah. Okay. I guess you could say that, urban condensation. That's a
new thing I made up. But anyway, let's get away from this urban condensation and buy now because of the Rona, or is it because the frenzy happened and low interest rates?
So, yes, I think it's a culmination of a whole bunch of things. I know, we've been doing this show now for 3 years, right? So 2 years ago, we were talking about the number of millennials moving back home with mom and dad,
right?
Living on their property or at their property, in their basements, that kind of thing. And I wouldn't be so shocked if it was a culmination of a lot of those millennials saying, okay, I kind of want to do my own thing. It's time for me to go ahead and move out. The
I've
rates are
saved
the
for 2
lowest-
years now. I'm good.
Right. Exactly. Rates are the lowest they've ever been in history. And so now I'm ready to finally spread my wings and fly. And it would not surprise me one bit if most of our home buyers, because I think last year was only 30%, but I would see like 30-40% being millennials.
Right.
It would also not surprise me because we have an aging baby boom population that some of them made the move because of the
silver
pandemic,
wave.
the
that
silver
thing-
wave that we talked about a couple of years ago.
That's part of my prediction.
Right. And so they could have also made the move, increasing the number of buyers in the marketplace. But I think a lot of it might have been the lack of supply due to people that were going to list that aren't listing now. And I'm curious if we're all underestimating the number of people who will be listing their home and the amount of inventory that will be coming on the market from the people that just decided not to sell last year because of everything that was going on politically, because of everything that was going on with the, like Pete Thorpe said, in the riots in the suburbs, right? Everything that was going on with the pandemic. I'm not going to list this year. Let's just wait 1 year. And will that alone ease the tension in the inventory? And will that match the number of buyers that are looking for a home? Halfway through the year last year, we were 1.2 million units behind, and we ended the year, and Lauren June thinks that we're 3 million.
3 million behind.
Right.
So that's going to take a lot of listings. Lindsay's going to have to work extra hard to ease that flood.
Right. And we just, so we are broadcasting live on Clubhouse at the same time that we're broadcasting on YouTube and Facebook. We actually had Jason Pantana, which is my coach and real estate extraordinaire, join the conversation on Clubhouse. And I'd love to hear his opinion too, because Tom Ferry came out and I think Tom said like no easing of the inventory this year. And I would say yes, but if the foreclosure moratorium, which actually was not released, they actually just extended that. Right. But if that lifts, and if the builders begin to build more homes, and if people actually list their home that were thinking about listing this year, is it going to ease enough pressure on the inventory to make a difference for home prices to come down, for more affordability to be there, or is it still going to go up and away? So, Jason, if you will unmute yourself, and I would love to hear your thoughts on what's happening in the economy here.
Hey, Ray, how's it going, man? I would say so here's the thing. Like I could give you a prediction in terms of what I think. I think your prediction is probably a lot more intelligent than mine would be. My vantage point is, what do I know now? Well, I know now that the market's very competitive. I just got off a coaching session and they're dealing with 2 weeks of inventory. So there could be changes. There could be some incentivizing for builders that could ease up lower price points or more moderate price points for new construction. Certainly that could happen. I think what you said is pretty interesting, that there's probably a shadow, whatever term you want to give to it, of people who would have sold, but there were reasons in 2020 where it was like, you know what, let's just wait it out and see what 2021 looks like. So, in fact, I have a coaching client that we're looking at his market in DC, and I'm using this as kind of anecdotal evidence. But in DC, all of a sudden, we started seeing a whole lot of activity on his listings that had been just crickets for a long period of time. And so I guess here's what I would conclude. Yes, there could be policy changes that affect housing one way or another. There could be shifts in new construction. There could be shifts with builder. There could be shifts with buyer morale, with listing. All that stuff could change. But what I know now is the markets are really competitive. And so the strategic opportunity for agents, in my opinion, is, you know what? Brand like you've never branded before. Position yourself like you've never done it before. Work absentee owners. Start circle prospecting as long as you're compliant with DNC and TCPA Act laws. Get serious about content. Become the knowledge broker. Post more videos and be all out the person in your marketplace who's bringing the info with whatever it is at that time into your local community, so that people are looking to you as, oh, he's the person, she's the person who knows the most about the market in this particular area. So I guess short answer, Ray, is I could see it going a lot of different directions. Based upon what I see right now, there would have to be some pretty big changes to abrupt the increasing price points and lessening inventory. Is that too? So that's my it depends answer. How's that? Cool.
Yeah.
No, I mean, I would totally agree with you. From the real estate agent perspective, there's no better time than now to focus on the branding and marketing and get yourself positioned well. The Walmart effect happened and impacted tons of small businesses long before it ever hit real estate, and it still never really has hit real estate, maybe until recently. We've seen some moves from Zillow recently. We've seen some moves from these big box places that, there may be in the future Walmart versions of real estate. And the small business has always had the opportunity in those instances to pivot and become specialists and provide better service, better products, a more custom experience, a more custom user experience or end user experience or customer experience that's unforgettable. And that's been the differentiator. So some people will never go to Walmart anymore because they don't get that kind of experience, and other people will go there all the time, right? So it just kind of depends on the value proposition that person is offering. So as far as the real estate agent's perspective, I think you're exactly right. As far as the consumer's perspective, if you're going to sell, get it on the market. Because if you wait a couple of months, the price accelerations may not be there. The low rates may not be there. People that could afford your home 6 months, today, right? 6 months from now, may not be able to afford your home that could afford it then. So I would say there's kind of two different perspectives as we're consulting and helping our consumers through navigating the market, I guess you could say. I think the advice would be, just what you said, we know what is happening now. And that's the same advice we would give the consumer. This is what the situation is now, so make a move now. Jason, you got something to add?
Yeah, I would add something sort of tangential, but it's a little bit on the same topic. I was having another coaching session this morning with a broker out in LA who deals in the Uber luxury space. And we were talking about just people's increased interest in second, third home markets. And he was like, when I was young, he made this comment. He's like, when I was young, everybody was trying to get away from downtowns. And then over the last 25 years, everybody's trying to get back into downtown areas. And now we're seeing people maybe move back out, but he's like, I don't know that it's permanent. I don't think it's permanent. There are still cities where you're seeing an influx of people. So it's not really the metropolitan versus suburban thing so much, but we just kind of said everything got shaken up. People are just moving right now. People are making decisions right now that are going to try to basically maybe fit them in the short term. And so this is, again, tangential. But I think in terms of marketing as an agent, and I'm coming from the agent perspective right now, I would also be very loud and clear about your network of agents around the country, around the globe, in terms of helping to place people in different markets. If they're relocating into or out of a market, if they're getting a second or a third home, I think it's really a good time to kind of visit, and that means interview videos with like Ray Allen interviews a broker from someplace else, just to kind of create the persona, the context that, hey, you can work with through Ray to be anywhere, and also helping to inform people about what their options are. I don't know if that really adds to the conversation necessarily, but again, it's just about now's the time to be really, really, I think, vocal about what are the options, what's working, what have we seen working, and helping people get local information. Because to your point about the whole Walmart kind of real estate experience, it's going to be nuanced in every specific market. And so I think that this is the time to do more knowledge broker type of videos, more market update videos, sharing your experiences. Even when you do like a just sold post, really take time to kind of tell the story. What can you tell without violating confidentiality that helps other people who are following along understand how the market's moving? I don't know if that's wishy-washy, Ray, but that's what I was going to add. Anyways.
Yeah, I would agree. Customer and client testimonials, I think it would be hugely useful. Your network of agents around the country, hugely useful, because that's going to be one of the big selling points of using the big box chains, right? Is, well, they can sell it here and they can buy it here, and it's all seamless. Well, if you can make the seamless transaction happen for them through your connections, whether it's on Clubhouse or whether you made the connections through the Be More Contributors group, or maybe like a Tom Ferry coaching, a little small thing like that. Well, however you're making those connections, I think those connections are invaluable to moving you forward as an agent, as an expert in the industry. Speaking of Zillow, let's get into the next article. Zillow expects another record year for home sales. So Zillow's 2021 housing forecast, which you can download on their website, it echoes the projections of other industry experts for acceleration of home sales and a value appreciation. So the numbers anticipated to be even higher than 2021. So I'm assuming that they're also thinking that more inventory will hit, and due to the more inventory, it's not going to quench the thirst of the buyer's market, that they'll just have more product to buy. Kind of what like Lawrence Yun was saying, there's still 3 million buyers that are still looking to buy. In fact, the company has already updated its December 2020 forecast. I guess this article was, maybe is that a typo? Oh, Zillow initially expected a 10.3 increase in home values through November of 2021. So it's already updated it since then. It's gone up 3%. So approximately 5.6 million existing home sales were sold in 2020, a 5.3 increase from 2019, according to officials. Zillow predicts 6.82 million existing home sales in 2021. That's the most recorded in any single calendar year since 2005. You recall, we just did the article a couple of minutes ago that we just had the most home sales of any since 2006. So this would be the next highest number. The quarterly home value index growth as of December 2020 was 3.2%. It's the strongest 3-month appreciation since 1996. So I'll get into a quote, and then I'd love to hear some of the comments and opinions of the people in Clubhouse and also the commenters who are commenting on the Facebook page or YouTube. Home values rose sharply near the end of the year, their fastest quarterly rate on record, said Jeff Tucker, Zillow senior economist. Sales are taking place at a rapid clip as momentum gathering in the market since June is pushing forward at full force and is expected to continue for the foreseeable future. For some reason, that was real hard for me to say. So they are thinking that there's obviously going to be more inventory hitting the market, and it's not going to quench those buyers, and that we're going to have more and more sales and transactions, which I could also see. I could see that happening, Dan.
I mean, I think it's kind of a no-duh prediction. So what I want the predictions that say, when is the market going to ease? When are we going to get more inventory? When is this going to chill? When are home prices going to go down? Because we keep seeing gains. So I think it's a no-duh prediction to say, no, it's going to keep going up this year. Sure.
And the housing affordability is something that we were talking about ad nauseum last year and the year before.
Yeah.
And how out of reach and out of range the home prices were. When the rates dropped, more people could afford the homes. So we haven't heard that much in the last couple of months. But then you'll see occasional stories about bidding wars, $20,000, $40,000, $50,000 over list price.
Right.
And that always, starts the conversation again about affordability and where we're at.
Well, then our next story does cover where affordability is at and loan amounts now, that keeps going up. So it's at some point the levee's going to break. There's too many things pushing against this dam it's going to break. Home prices can't keep going up like this because affordability cannot be sustained. It can't. And I've been literally saying that the entirety of this show, which is 3 years, is this can't be sustained. But when you bring mortgage rates down, just like you mentioned, right? When you bring them down, cool, that opens up affordability because it brings down what their payment will be. And I just got a buyer pre-approved yesterday or day before that is approved for way more than they thought. Way more. I mean, up into the 800,000 range. And they are like, okay. And then it just becomes the comfortability level of what they want to pay per month. But again, I want to predict, when is this all going to ease? Like, I don't see a bunch of flooding listings into the market. I don't see that happening. And if you want to go to Colin's comment, I don't know if you can find a third hand, but Colin makes a great statement there because he says, in 7 out of 10 school districts I cover, meaning Colin, and he's in Pennsylvania, we are 1 month supply or less. And where he's at, 1 month supply or less is insane. I mean, they're usually averaging, I think, 5 or 6 months. Of course, Colin can correct me, but we are going to be chasing our tails. Builders, rate increases, and foreclosures are the only things that can pull us out of this. So I think that's a very astute statement, as Colin always has great statements. And that's kind of a rough prediction of what needs to happen for this to ease, right?
Yeah, I would agree. I mean, we know that housing starts in January of last year. We're 13% higher than normal. And we talked about that heading into the year. We said, hey, this is going to be the year that inventory is back on track. And you remember like Zillow and Redfin and all of those saying that by the end of 2020 I think it was by the end of 2020, it's going to be a buyer's market. You remember that?
Right. Yeah. That's what it all was. And we kind of said that at our year-end show of 2019. And we didn't cover that on our year end of 2020, but it was really interesting. It was like, no, interest rates are going to go up here and then it's going to be almost a buyer's market. No, that's not.
Yeah, that didn't happen. But I don't think anybody could tell, no one could predict what happened. But now that it has happened, no one's really out there predicting what's going to happen either. I'm not seeing the same stories. Like by the end of the year, it'll still be a seller's market, or by the end of the year, it's going to be a buyer's market. And it's really interesting to me to see the difference in the lack of prediction, because I think it's just so up in the air according to what, a government can make a decision to shut everybody down for a month. And, that has drastic impact across the board.
Well, and also you have, I believe that rates were held low or kept going lower because of the Rona, and because, there were a lot of layoffs and furloughs at the beginning of the whole thing. And then by the end of the year, it got back to almost normal unemployment rates. But
right,
they kept those interest rates low, which then I think all those people that kept their jobs, I think they were like, well, I have to buy now. Whether they don't care about the Rona anymore, they don't care about whether or not there's inventory. They just see 2.25 and they're like, well, I have to buy.
Yeah.
Like I have to. I've been, I was the millennial that moved back home, and now I can do that. I've saved up the money and I can afford more than I thought. I have to buy. So I think that's a major driver. So you kind of going back to what Colin says, and then adding in, as the vaccine becomes more and more, whether people get it or not, it's going to ease the fear of the Rona. That's a great show, by the way.
I mean,
right.
California's opening stuff back up. I'm like, come on. So we have some people joining us.
There's numbers behind that. If you want to, there's numbers behind that. It's not 2 days. Yeah, it's not, that didn't happen, but there's numbers behind it. We've been declining since the last lockdown quite a bit, and things are opening up. But yeah.
So if you're just joining us on Clubhouse, you can raise your hand if you want to make a comment about any of these articles that we're talking about. You're joining live the Bearded Men of Real Estate show. We are broadcasting also on YouTube and Facebook at the same time.
Yeah.
That's never been done before. You can also hit the plus button, and we'd appreciate if you'd add other real estate professionals that you know of into the show, because we'd love to get their opinions on some of this. If you're not willing to say anything live, that's cool. So the Fed has, I did a little video on this on YouTube, but the Fed has two main jobs. One is to make sure we maintain full employment, and the other is to avoid inflation. And right now, everything is backed up. Like, I don't know if you've tried to put an order in for a piece of furniture or something like that, but everything is backed up. Nobody can get supply, and the prices are going up on that stuff, which means that is inflation. The other thing that we've noted is that full employment is determined to be 4 to 6.5%. That's historically what people call full employment, where if you want a job, you can go get a job. The last time I checked, we were at 6.7%. I'm not sure what we're at today. So that has all the markings of getting close to full employment. The price is rising due to inflation and lack of supply. I mean, people can't get stuff in from China still. So because of that, I could see Yellen raising rates sooner rather than later. And if they did, that would ease the tension in some price points, as people would be less likely to run out and buy. I mean, I think you'd see a spike, right? As soon as rates start to increase, people are going to run out and buy. But then after that spike kind of works its way through, you're going to have a lot of people that just kind of reconsider or sit around, or they're not in as much of a hurry as they were because they think rates are going to normalize again. So that should ease the pressure on the supply side. And if we have an increased inventory, I don't know what builders are going to do. I mean, they can say they want to build, but if they can't get supplies,
right,
then how are they going to build? There's plenty of labor, but the prices are still a little high on it. There's, land prices are still high. So, I mean, the prices are going to remain high on new construction, I think.
Well, we do have, I don't know when we're doing this either. It's going to be after the Homegirls show, I think, but we're going to either get my buddy who's in new construction. Again, I mentioned, I think last week, he does the entire process from beginning to end, finding the land and all that stuff. And then, or we may be working on a CEO of a couple big companies as well. So that would be really interesting. Huh?
I was just saying, we're going to have them as guests on the show, and we'll kind of pick their brain about what they're looking at and the forecast they're looking at. So,
which will be interesting, because we can talk about new construction all we want, but I don't know what land costs right now. I don't know what the future of that and lumber is right now. So it'll be very interesting to hear that, because we've talked about on the show, we need more new construction to help ease A, B, and C. But what does that really look like?
When is it affordable to them? All right, Dan, you want to get into the next article? Speaking of mortgage rates and mortgage demand.
Yeah, and I'll rip through it. So weekly mortgage demand falls, but the size of the average home buyer loan hits record. It's like, is that negative? It falls because it does the same thing it's always done. But anyway, home buyers are seeing prices rise at the fastest rate in over 6 years. as highly emotional, which I think is interesting to put that in our highly emotional Rona-induced demand for housing butts up against a record low supply of homes for sale, resulting in bidding wars.
Why is it emotional demand? What made it emotional demand?
Highly emotional demand. Like, I have to buy, I don't know. Like, I'm a highly emotional person, but I don't understand highly emotional Rona-induced demand. I don't understand. Anyway, mortgage applications to purchase home fell 4% for the week, but we're 16% higher than a year ago. And by the way, we're in January and it's still 16% higher than a year ago. This is when everything's chilling and like not much is going on, right? Things are just kind of starting to open up, and the spring market is coming, and but still 16% higher than a year ago. This is the crazy one to me, Ray. The average loan amount for home buyers hit another record high. It's at $395,000.
Wow.
That's crazy. For me, that's normal, but for a national stat, that's pretty crazy.
Do you think part of that was helping out by the increase in the FHA lending? Remember that? Was that beginning of last year, or was it?
Yeah. That might have been in 2019, but remember they were, well, in my markets, remember they were really far off. It was like 355 or something, but then in LA County it was like 625. And I'm going back to a couple years ago, but it was really far off. Now they've kind of evened them out a little bit, and in 2 of the counties I work, they're much closer. You can afford quite a bit more. So I think that is helping. I think you have a good point.
These discussions about previous articles just make me realize how long we've been doing the show. I mean, that's crazy. So.
I know. And I had this thought the other day. We've been doing this show under one presidency. So now we're on our second president now. So it's going to be interesting to kind of go back and see what, especially with how Ray and I look at just politics in general, but the show and how we look at these headlines. It'll be interesting to kind of watch this stuff. But this is a quote from Joel Kahn. He is an MBA economist. Since hitting a record low in April 2020, the average purchase loan amount has steadily risen in line with accelerating home price appreciation occurring in most of the country because of strong demand and extremely low inventory levels. Home buyers also tend to be less sensitive to small moves in interest rates. After setting more than a dozen record lows last year, mortgage rates began to edge slightly higher to start this year. The average contract interest rate for a 30-year fixed is now at 2.95. It was at 2.92 last week.
Wow.
And it should also, we're pretty much at 3. Let's just call it 3. It's going to go up above 3 in a couple weeks. If that's, you know what I mean? If that's a 3-point increase.
But that's crazy that we're looking at 2.9 still. I mean, we're still under 3. That's just nuts.
Yeah, with the new president, with the new everything, with the Rona easing, all this stuff still at under 3%. And it should be noted that applications to refinance a home, which are always much more rate sensitive than the daily rate moves, they fell 5% for the week. But Ray, we're 83% higher annually, so people are still refining. And then mortgage rates were 86 basis points higher 1 year ago. Blah blah blah. But
interesting.
Yeah.
So we've had some other people join us on Clubhouse. If you're joining us, this is the Bearded Men of Real Estate Show live. We're actually recording a podcast and rebroadcasting on YouTube and Facebook at the same time. But if you raise your hand and you want to say something about one of these articles, we can add you to the conversation. If you're already up there in the speaker box, just unmute yourself and then we'll know that you have something to say there. So we have like Mary, Janet, Marie, Matt, Christian. Oh, I think he's also chatting. That's cool. And then Dustin. So he's So thank you guys for joining the show on Clubhouse. We'd appreciate it if you'd hit the plus button, add some of the real estate professionals, we're coming up on our last article, but I mean, I haven't really seen a decrease in the number of calls or inquiries I'm getting due to the mortgage rate dropping or coming up just a little bit. So I don't think people are that sensitive to it for home purchases. I could see that some refis may be reconsidering currently though.
Yeah, and I think Jason said it best. We know what we know right now. So you can't really, if you have a buyer not selling a home, you have a buyer that was thinking about, 8 months ago or 4 months ago, and they could have gotten 2.5 and now they're at 2.95. You can't really, well, that's the past. I can't really get you that rate anymore. I can't really have that conversation with you, but let's look to 4 years ago when they were at 6%. Yeah. You know what I mean? Let's have that conversation. You can still afford more than you could 4 years ago. And now potentially, your income has increased, your savings have increased, and now you can afford much more homes. So it's definitely an interesting conversation. By the way, there are some comments on
I was just looking
emotional home buying.
Pete, let's see. Let's go to Dusty. Yeah, she says that I asked the question, why are the home buyers emotionally from that last article? It says because they're sick of being cooped up in 1,200 square feet with 3 to 5 kids.
That's a lot of kids in 1,200 square feet.
Yeah. So that would make it an emotional home buyer. Mike Elizabeth Rodell says buying a home. I just realized that everyone in Clubhouse is saying why is he saying Mike Elizabeth Rodell? So that's a Facebook comment. We're taking a Facebook comment on the show. Right. They have a joined account. All right.
Yeah, I don't know if you guys know on Clubhouse, but Ray is also hosting a show with me right now. So
yeah, that's right. Mike Elizabeth Rodell said, "Yeah, well, on Clubhouse, it's just my face that keeps blinking every time you say something. So I don't know if they get a difference. We'll have to. I'll do a little special after we do this in Clubhouse." I'll stick around on Clubhouse and just kind of talk about the process of how we did it and why we did it and just the experiment that we went through to get this far. But anyway, Mike Elizabeth Rodell says on emotional home buying a home is highly emotional process, but it is stressful. And most buyers are finally getting the picture of how crazy the market is, and bidding wars and having to write multiple offers is even more stressful. Okay, so emotional home buying because they're going through the process, maybe not successful in the first time, they're having to fight, right?
Yeah.
Thorpe said there's an 8+ month build cycle right now. Yeah, I know a builder that they kind of slowed down building last year because they couldn't get the supplies and materials they were looking for. And really, you can't bid a job and promise a client a price and then raise it 20,000 on them at the end. That's what she was talking about. That's what she said.
Especially 8 months from now. You can't bid it right now, and then 8 months from now, that end product is going to cost more.
Yeah. So I know a lot of builders that they are starting a spec home and everything is ordered. And that is it. Like everything is ordered and it's on the way, and that's it.
Yeah.
And Pete, you want to add something to that? I saw that you unmuted there.
I did unmute there. My coffee situation has been resolved. But you're definitely right about that. The pricing for the houses, with it being such a long cycle, it's nice if a buyer can get in and make an offer on a property now. It's new construction. They get themselves locked in on the price. My worry with that 8-month cycle, though, is if we hit another fire season like we had last year and we get crushed in lumber again. I mean, they're paying like $7-8 a 2x4 right now, and it used to be like $3. So I think that's what builders are also kind of worried about and trying to hedge their bets a little bit.
Yeah, that's a good point. I was actually making a wood rack this winter because we got some more firewood and I was running out of space to put it. I was like, I'm going to make a wood rack. So I go to the store and I buy the treated lumber for the wood rack. And that started like adding up the cost of this wood rack. And I called a welder buddy of mine. I was like, how much would you charge for a wood rack? And I gave him double the price, or double the space. It was like roughly the same price.
And you metal. Could have someone else make it and it'll be metal.
It's metal. I was like, whoa, wait, so treated wood compares to a metal wood rack? I mean, that's crazy.
Yeah, but treated wood looks really cool though.
Over time, yeah, it looks really solid. Dusty Martin says, not even kidding, every occupied home I've shown for 2 weeks has 2 bunk beds in every room, and a bed and a crib and the master next to the parents' bed. Wow. Yeah. So yeah, I guess the affordability. So let's think about this. If the affordability stuff was an issue and home prices are going up, people are like, well, we'll wait. Let's just wait. We'll wait. And the kids are growing and they're having more children. I could see this being a pile-on effect where or pile in, right? They're just piling more kids in there and they're finally like busting at the seams. We got to find a different place. Melissa Mara says, we have a builder doing a small 16-house development. They just started building 2 of the homes, but one of the buyers was initially told they would be done to move in February. Only the framework is up. Wow. So yeah, stuff is taking a lot longer to build. Pete, do you have something to add?
Yeah, pitching back in on that 4 or 5 kids in the house. You can sell the house in a hotcake minute. The problem is people don't.
Well, then what are you buying?
Offers. We're getting outbid all over the place. We had a house at 285 that I brought a buyer in at 20,000 over. I come to find out that my cohort 2 doors down came in at 30,000 over, and he's still lost. It's it's insane what you have to kind of try to bid, and then you're gonna have to deal with appraisals. So a lot of people are trying to make up that appraisal shortfall. But almost every case, I don't think I've seen in the last 6 months, I don't think I've seen a contingent offer fly. Everything has been either cash or just straight financing.
Yeah, and I have buyers right now, unencumbered. No, they're not selling a house. They're moving from Arizona to California. By the way, I must make that point because people are flooding out of California. People are flooding. I'm as offended as Jay Glazer, by the way. People are flooding out of California, but I have multiple buyers moving into the state right now. But anyway, we're 90 grand over. I just sent our counter back. So we got the seller multiple counter offer. We just sent our counter back. We're 90 grand above. We started 50 grand above asking. Now we're 90 grand above asking. And I don't know if we have a chance. I think someone's going to, this one's listed at 900. I think it's going to go up over $1 million. It won't appraise that high, but I think it's going to go that high. And then I don't know what they're going to do. They're going to have to cover a couple $100,000, I guess.
That's insane. Christian Harris, who's joining us both on wait, am I echoing? No. Okay. Christian Harris is joining us both on Clubhouse and watching Facebook. He commented, he wrote, he said, being able to watch live and listen on Clubhouse at the same time, mind blown, double the goodness. Christian. And also HL Matt McGee says, which one is ahead though? The audio is way different for me on here compared to what I hear in Clubhouse. So I think the audio on Clubhouse is way more immediate. Because it's only processing audio, which is one of the benefits of Clubhouse. Like when Clubhouse first came out, I totally dogged it and made fun of it because I was like, okay, a social network for conference calls. This sounds like fun, because the last thing people want to do is like conference calls. But actually, the last thing people want to do is Zoom calls. And they're okay, like just having some audio going and putting your headphones in and getting something done. Because you know, it's awkward whenever you're on a Zoom call and everyone wants to see you and you just have to like do stuff kind of undercover, right? Like your hands are down and like you're still typing stuff and you're placing your camera strategically so that you can work on something, but it looks like you're looking at the camera. And they're like, right, Ray? And you're like, yeah, that's right. Like, I don't know what to say. So
your phone's just below the camera. There you go. Yeah, no, everything's fine. You're totally paying attention. Yep.
So I find Clubhouse a little easier because you can process what's happening auditorially without being distracted with the video. And for whatever reason, like I'm having a hard time listening to a Zoom call and working, but much easier time listening to some of the conversations that we're having on Clubhouse. So I kind of like it now. Matthew Clanton, he is the producer extraordinaire for Clubhouse. He's over there.
He's the mastermind.
He is bringing up the speakers for us as you guys raise your hand. He said Clubhouse is phone call speed. Facebook, YouTube is TV speed, 30 to 45 seconds late. There you go. Let's see, Howard.
We're very controversial, so we have a delay on our show. That's why.
That's right. We don't want to say any wordy dirts. Tim Macy said, "I'm late, but I'm here." Well,
hi, Tim.
And Howard says the problem with Clubhouse is you can't comment as in Facebook, right? I mean, well, you can. You just have to raise your hand, and then somebody's got to let you speak. But then there's all these manners about like when to talk and when not to. Howard's on both. He's listening to us there too. All right, so. Yeah, interesting market. Back to the point of the whole conversation. Really weird market, and the big question is what's going to happen with builders. Which I
don't see it builders being the fix. I don't. That 8-month number right there. I mean, I don't see that being the fix. I just don't. I think it's unfortunately going to be the foreclosures. That shadow inventory that's just hanging there, which we don't really know what is going to happen. That'll both ease the market and bring prices down or settle them, I guess.
We can. I mean, one of the Clubhouse users can probably Google this and give us the response a little faster. But or actually one of the commenters, you can just copy and paste this info. But the question is, what is the average number of foreclosures per year? And what were the number of foreclosures last year? And that would be that shadow inventory that's, you subtract one from the other and you get that shadow inventory.
But remember, though, I guess it is technically shadow inventory because there are people missing payments. So they would count all of that.
Right.
But how many of those are going to get a loan mod or whatever it is, and how many are not? It's just that is the biggest thing. And I know it's unfortunate, but it will bring prices down and it will help ease inventory. But I feel bad saying that. I really do. But
it's got to be part of the solution. Pete, what do you add?
There are only about 144,000 foreclosures in 2019 and like maybe 10,000 last year for filings. there's a stacked up back behind it. I know
That's a
some
big
title
shadow.
brokers are getting ready to staff up because they know there's going to be a little bit of a wave, but it's definitely not enough to make a real dent in the market. You're going to see more properties are going to become available, but it's going to be all in the cities where people are fleeing currently. So they're leaving the cities, and you can go get a house. You can go down to Baltimore City right now and kind of have your pick of a whole lot of houses because nobody wants to live down there. The suburbs, though, you can't find anything. It comes on a market Thursday or Friday, and they wait until Monday and take multiple offers on Monday, and it's off the market then with contingencies waived, appraisals waived, over ask, unless you're completely ridiculous with the numbers, but that's typically more of a California thing. Damn.
nice little punch. So yeah, I mean, I would agree. Then it's going to be part of the solution. Builders are going to be part of the solution, but it's not enough in itself to make a huge dent in it. And Matthew Clinton reminds everybody, who is the moderator in the Clubhouse group. He says, "Raise your hand." So if you want to say something, just raise your hand. We'll get to you.
And I totally agree with Dusty, by the way. That's kind of what I meant is stabilize them. It'd be tough to go down. It would have to take a crash to go down. What is a correction rate? 10%?
Yeah, correction is 10%.
That would be insane. So something catastrophic would, if a pandemic can't do it, and it only proved to boost the housing market, I think I agree with that. I think it'd be more of a stabilization, which wouldn't be a bad thing.
Yeah, Dusty, she says, I don't think I would say it would bring prices down, but hopefully it would stabilize them.
Yeah.
All right, so we got one more article that we're going to talk about. It is on housing starts that we were just talking about, maybe part of the solution. This one is from Housing Wire. Housing starts hit its highest pace since 2006. Single-family housing starts ended 2020 on a high note, rising 12% in December to 1.338 million units pace. That's the highest pace since 2006, according to the Census Bureau. That's up 27.8% from 1 year ago. And remember, a year ago, we were talking about housing starts being up 13% above the previous year.
Right.
So 2020 will go down. This is a quote from Matthew Speakman, Zillow economist. 2020 will go down quite unexpectedly as one of the best years for home builders in recent memory, and proof that great challenges, and not just those posed by COVID, can be overcome with hard work and creativity. Demand for homes remains sky high despite still raging pandemic as people look to take advantage of historically low interest rates to find their next home. So you can see more about that article. Supply side headwinds will remain in 2021. That is Odetta Kushi, the first American deputy chief economist. Given the underbuilding that took place from a decade following the Great Recession, it will take years for builders to close that deficit. So that's kind of what you were saying too, is that it's not going to be an immediate thing, and it's definitely going to take years to ease up on the housing inventory from just builders themselves. So it doesn't look like we'll have a perfect storm with foreclosure moratoriums extended, with builders still lacking supply. But I did have fun making that argument during our special prediction show that we did at the beginning of the year.
Yeah.
If you have something to add to that, I see some people with the party hats in the Clubhouse. One of them just left. But if you are watching the Clubhouse, you can just raise your hand and we can add you to the conversation. We are broadcasting live on Clubhouse and recording a podcast. So if you comment now, it will be added to the audio version of the podcast later. And it's still broadcast live on YouTube and Facebook. So people that are watching there can also chime in. Colin JJ Cameron, he commented on Facebook, said, I think Dan should do a video where he's an adult version of Chucky. What?
The correct sentence should be, I think Dan has done a video of that. What?
Have you already done a video?
I think you're missing what Colin's trying to say.
I probably am. Melissa Mara says, I don't think builders will be able to be part of the solution. They're continuing to build for the higher end in most markets with prices of materials going up. It doesn't help. Yeah, I mean, we have seen that. I know a couple of builders in our area that are starting to go a little bit lower because they can basically they break ground and show the plan and sell it. And they're making a really good profit doing it.
Well,
so
and I mean, I think
have increased in the lower market.
Well, and think about it this way. I mean, if lumber prices and labor prices and land are higher and then labor or land isn't available, they're going to go to those areas where the price per square foot when you sell a home is much higher.
Exactly.
So it's going to be hard, really difficult to ease that lower third of the market.
Yep.
And on that terrible disappointment,
Terrible disappointed. I do want to note that CoStar is trying to buy CoreLogic. That's interesting. There's a couple of other bidders in the game, but you guys know that CoStar announced themselves as a Zillow direct competitor and hopefully a purveyor of realtors in the future.
yeah, a month ago, 3 weeks ago.
Yeah, that was a month ago. They bought HomeSnap. CoStar has long been a commercial spot, right? So they commercially people would list their properties there for a long time. And I think they're trying to become the residential version too, and a competitor for Zillow, something that our MLSs have never become unless you're in Houston. I will say, let's see, we have a lot of love and likes on the post, so I appreciate that. We have one angry face from Mike Elizabeth Rodell. That must have been Mike.
Oh, it's because I haven't flown out to give him a hug yet. He's missing my hug. That's what he's missing.
It's probably because they're on Droid and they can't get Clubhouse, right?
Right. Yeah.
That's been the crux of the matter. If you missed our thumbnail for the show, be sure to check that out and go back and look, because it is me having a good time with headphones on Clubhouse and Dan disappointedly looking at his Droid. So hopefully they'll put that Droid up. I mean, they got to do that eventually.
Superior phone, but I can't get on Clubhouse.
Mike Elizabeth Riddell said not intentionally, but she probably has not asked Mike. I bet he did that intentionally. All right, so thanks for joining the show. If you're on Clubhouse, hang out for a minute, because once we close this show, I'll be live in Clubhouse to tell you, Lindsay, especially because I know you were asking how we did this. I'll kind of tell you how we did it. I'll probably have to do a video call though, so I can show you these connections, because it's a little bit nutty. So if you want to hang out in Clubhouse for a little bit after the show and have a little discussion, a traditional Clubhouse discussion, you're more than welcome to. We will try to also rebroadcast this, or not rebroadcast, but we'll try to broadcast this next week as well on Clubhouse, just like we're doing now. So if you see the invite come around, if you're following me on Instagram or Dan on Instagram, please share that, because we'd love to have an actual audio discussion. That would be really fun too. And then if you are catching us on YouTube, we'd love it if you would subscribe and hit the bell so that you'd be alerted of our live shows. And we will also cut up each one of these articles into Be More Chops. And Chops is just a small segment talking about the show itself. And then lastly, actually next to lastly, we're on Facebook. So you can find our Facebook page, like that, and also click the notifications if you'd rather get the content delivered there. And then lastly, we have a podcast. So the audio version of this will be in the podcast. Your comments that you spoke live to us, which is really cool, will also be in the comment, not in the comments, but it will actually be in the show itself, in the audio version of the show. In the comments of all of that stuff, we will have a rundown of what we covered today with timestamps and all that jazz, so that you can zoom to your favorite part, which I know is probably the banter in the beginning. So
I know people love the banter. I know they do. It's just the weird internet trolls that don't like it. But I just want to say thanks for, this is literally groundbreaking and historic right now. We're live on all these different channels, on YouTube, on Facebook. I was live on my GoPro, but we have live callers coming in to a lot. By the way, since day one, Ray and I've always considered ourselves a podcast, but we thought it would be brilliant to go live on Facebook, get some comments, and then we pull the audio, we pull the video, and we can then disseminate it out to the different proper channels, right?
Yeah.
But how cool is it that you're watching us record a live podcast? We get the view, we get the YouTube comments, we get the Facebook comments, and now we literally have callers coming in that are having their own discussion. This is mind blowing. What two dudes, hosting a bearded real estate podcast, and Matt, masterminding this whole thing. It's just amazing.
Yeah.
And Ray somehow finding a third hand.
This has been the most buttons I've ever pushed. I didn't even do the screen shares of the articles like we normally do. So this was definitely trying, but I appreciate everybody joining the show. You can find us at the links below. So thanks so much for joining us, and we will see you guys next week.
Bye. I love you.
Clubhouse, keep hanging out. Bye. I'm watching if you leave.